All right, welcome everybody. Let me just click on my screen share so you can see my screen and we will get started. Let me know if you can hear and see me okay. Hopefully you should be able to see everything and hear me. All right, so Gene, before I get going in here, any announcements you want to make?
Well, first of all, welcome everyone. Good to see you all here. And do me a favor and just look in the GoToWebinar console and locate your chat area and just give us a hello. And that just lets us know that, yes, you can hear us and the audio is working. And you can see Bennett's webinar screen right there. So while you're doing that, I did want to invite everyone to our Stock Analysis Fridays, which is every single Friday at 8 a.m. Pacific time. And I'm going to post the link for that here. And I guess, Bennett, with no further ado, I'll give it back to you.
All right, great. Thanks, Gene. One other thing to mention too is I just did a market update forecast for 2024 and the remainder of this year, including a housing market update on that. And that's going to be posted on our YouTube page. So make sure you are a subscriber. It's free to our YouTube page. And Gene will put a link up there in the chat area before the end of the session today where you can join. And also, too, it's the same place that we do the Stock Analysis Fridays. So that's kind of a cool thing to do. And the reason we do all this stuff is because it gives me a chance to show my software off, right? So it's kind of a win-win. You get something out of it, and so do we. So that's kind of why we do it. A lot of people ask us, why do you do all this free stuff? Well, that's why. All right, so it's kind of good to know. All right, so now if you have any questions for this webinar, this is one I do just for my clients. And while we post this recording, it's also hidden in our YouTube page, but we give you a direct link in the client VIP area where you can access it too. So we record all our client support so you can go back, but they are unlisted, they're hidden because it's basically our webinar, right? All right, so this is a place where you can come and if you have any issues or problems or something's not working, you can address that here, okay? All right, so without any further ado, let me just go through the administrational items required. And that, of course, brings us to the risks involved in trading the financial markets. We work in a realm of probabilities when we trade or even invest in the markets. So past performance does not guarantee future performance. Also, too, it's possible to lose some or all your money trading the financial markets. Hypothetical or simulated performance have certain inherent limitations. You don't know about the fills and things like that. Also, too, you want to be trading with money you can afford to risk, called risk capital. That's really important. And also, too, we don't know your personal situation, but your money manager, your financial advisor should. So definitely run everything, you know, if we talk about a stock, we recommend run that by your financial advisor because they'll know if it's good for you because there's many things that they take into account that we aren't aware of about your personal situation. So, you know, run all that stuff by them. And then finally, know how to do money management on each and every trade, which is also our risk control, of course. And I got a couple of books dealing with that. I also got the new book, The Art of Trading, and then the Elliott Wave Techniques. And we'll put a link up there for you, but you can get those on the website. We also have specific software we use. Many of you here are using it already, so I won't go into that, but if you want to learn more about it, on our software as well, on our website as well. All right, so let me come out here. All right, so if you're using TradeStation and have any questions, we have that running. Same thing with NinjaTrader. What I thought I'd talk about until there's any specific questions is a couple things. I wanted to go over the art reversals. I've been getting a lot of requests on what those exactly are, how they form. And so let's go over those quickly today. And again, of course, this is the content for today, but if you have anything that is specific, feel free to chime in and put that question in the questions area. Okay, so we have two types of art reversals. All right, we have what they call a 1B bullish and bearish. So I'll put an up arrow for bullish, down arrow for bearish, and then a 2B I'll put way over here. And again, there's bullish ones, and then there's bearish ones as well. So both of these are called art reversals, but they're actually categorized in a more specific way as 1B or 2B. So you'll see those actually being printed on your chart. And let me show you where they are. Okay, so if we go on a chart here, you'll see them here. Okay, here's the 1Bs, that's a bearish, here's a bearish 2B, and here's a bullish 1B and a bullish 2B. So you see them on the charts like that. All right, so that's kind of where they go, and they usually actually, a definition I would say for an art reversal is a very specific type of pivot point. You know, there's lots of pivot points in the market, and you'll see markets form a pivot point that may not create a 1B or a 2B, right? So you may not see that even though it's a short pivot point. And the reason for that is our system is actually analyzing the heck out of the price bars that go into the formation of that pivot. And it's looking at momentum. If volume is present, it's looking at volume, and it's looking at the price bars, a certain number of price bars before the pivot point precisely, to see if it fits the formula for the labeling of a 1B or a 2B. So when you see a pivot point without a 1B or a 2B, don't think the system's not working. It just didn't pass the mustard of what the system's looking for. So let's dissect what a bullish 1B looks like here. So if we have a move up off the bottom, or up off any type of support area, I'll just call that support, and the market moves up, and you get a pullback here, okay, and then moves up again here, it's possible you could get a art reversal forming here or here, okay, very possible, all right? If and only if the actual pivot point itself meets the formula for a 1B or a 2B, right? And if it doesn't, you're not going to see anything. And the idea is that, yes, we know there's a lot of pivot points in the market, but which ones can we make money from? That's the question. And that's why the 1Bs and 2Bs come to play, because they identify the best pivot points for you to take the trade on. All right, any questions on that? So I'm just going to erase this little area here and then go into more details about pivot points and also the price bars that are formed when looking at them. All right, so if we have a move up, a 1B price bar is your ideal, it's almost like a fractal top. It's an ideal one price bar high, and this price bar here is actually going to tell us when the market is rolling over. So this is going to be a bearish art reversal. And this price bar here, which is actually at the top of the pivot, all right, has to be bearish for this to be a bearish price bar. It has to be bearish, okay? So that would be a bearish price bar. And I'm going to go into the definition soon of how we label price bars. So it has to be bearish. If it's bullish, it can't be a bearish 1B or 2B in that case, okay? So that's one of the things the system looks at. It's also looking at the momentum and volume and the price bar type of the preceding price bars before the pivot price bar. So we'll call this little circle here identifying the pivot price bar. We'll call it the PPB, for lack of a better acronym, okay? So that's the PPB, all right? Now, if this meets the formulas, you'll see a 1B start to drop when the price bar is completed, okay? So let's go back and erase a few things here for clarity. Okay, so there's where you would see it, and it would be a bearish one, and it usually like has a little, circle on TradeStation, I think a diamond on Ninja Trader and some of the other platforms. But the 1B icon, the actual text and the little dot under it, will form on the PPB, okay, bar. And we call that also the signal bar, right? All right, so when it forms, it doesn't mean, when you see it actually imprinted on the chart, it doesn't mean you take the trade. It just is identifying the signal bar that needs to be reacted on the following price bars, depending on what happens. If prices, after the 1B has designated the signal bar, if prices go below the low of that price bar, you'll get an entry on that. And if you have the voice activation software, that will tell you like something like bearish 1B reversal entry now, okay? You will not get a voice if you just see the 1B. The prices have to go below the low of a bearish 1B for you to get the entry voice. So technically that's when the signal is generated. Now, another thing is that we know they have to go below, but you may get a price bar that is an inside price bar, or maybe we get one like this, or it meanders, and then all of a sudden goes down. You would get the signal here as well. That's where you would get the entry. So it doesn't have to be on the next price bar. That's my point. It can be on any price bar that goes below the signal bar, provided one very important thing. All right, because you have also a high of the signal bar. So if prices are here and go above the high, because this is a bearish one, remember? So this is your entry, okay? If you never get the entry, but prices go above the high of the 1B, the 1B is gonna void out. And that means it'll turn gray. In other words, it won't be red. It'll turn gray. Or if you're on a white background, you may not see it, it'll just disappear, okay? Depending on the color you've chosen to see the 1B. All right, so that means the signal is voided, okay? The whole search for another 1B pivot point starts over. All right, so that's important. Now, by the very same token, all right, let me just erase this area here. Every time I do this, it reminds me of being in high school and, oh, geez, what did I do there? And having to erase the chalkboard. Remember doing that? All right, give me a second. Of course, there's always one kid in your class that would screech it, All right, so let's do that. All right, so now, good, okay. All right, so let's take a look at another scenario. So if we come up here with prices again, and we get our nice pivot point price bar, that's bearish, all right? And we get prices go below it. So there's your entry right here. This is the signal bar, right? So that's gonna get the 1B and the dot or the little diamond under it, right? So that's your signal bar. So the next bar we would enter here. And then if prices come down here, all right, and form another 1B, a bullish one, then you would want to exit on the bullish one. So that is a scalping technique you can use with the reversals. And doing it in this way, you'd be entering and exiting, when a different 1B occurs. In other words, a bearish to a bullish or a bullish to a bearish, depending on the direction of your trade. All right, so that's kind of one way. Now, if you go in, let me just erase this again. If you go in, let's say prices drop below here, but it reversed and didn't work that time and went above the high, you would get an exit signal. So a little voice would come on and say 1B reversal exit now, okay? And so the trade would end up at a loss, right? So, that's how the pivots work. So on a 1B, you could use them with trend trading and use them to scale out of positions. If you've got a big run up and you see a pivot 1B forming, you know your chances of getting a pullback are pretty good. So you could draw a fib retracement for the profit taking pullback and see if it's worth taking a trade. Okay, that's one way to use them. Or if you're stuck inside a channel, you wait for the 1Bs, bullish and bearish 1Bs to form at the support resistance levels at the edges of the channel, so to speak. That's another way to use it. Okay, so there's many ways you can use the 1B. Oh, let me go back. All right, now, one thing that is very important I need to cover at this point. Notice that one of the key requirements of a 1B is to have a bearish price bar if it's bearish, and a bullish price bar if it's bullish. Now, in the art realm or reality, what we do is we determine bullish and bearish price bars differently than most methods. All right, most standard charting platforms, will give you, and you can use candlesticks too, but I'm just going to use open, high, and low close price bars. But if you have an open here and a close here, that's going to be bullish, right? For most people. For us, not. That's bearish. You're like, whoa, what do you mean? How can you have it so different? So what we do is instead of looking at the close versus the open, which is what would have created a bullish price bar for most, what we're looking for instead is where's the close in relation to the entire price bar? In other words, from the high to the low. If the close is below the 50% mark, in other words, right in the middle, whatever the close is, find the middle of the price bar. If it's below that, it's going to be bearish. The reason for that is, think about this. If you have a price bar that looks like this, just think, it opened here, okay? The price bar got pushed way up here. The bulls pushed this up. But you know what? They couldn't keep it there. So it started moving down and closed below the 50% mark of the price bar. So if you had a strong bullish price bar, it should be closing above the 50% mark because that means the bulls are in control. But if the bears are in control at the end of the price bar, then it's going to close below the 50% mark. So I care about who's in control at the end of the price bar. And so therefore, if it closes below the 50% mark, it's bearish. Has everybody got that? Because it's important when you start thinking about 1Bs and 2B reversals, because if you saw a price bar like I showed you before that's like this, and it gets painted red for bearish, and you get a 1B here and you didn't understand this, you'd be scratching your head wondering why that's a bearish price bar. See what I'm saying? Okay. All right. So that is the 1B. All right. Now that you know how we color price bars, which is an important aspect of understanding all this, let me erase that. All right. And we'll take a look now at what a 2-bar is. So I'm going to draw in the 1-bar again, just so you can remember what that looks like. Oops. Okay, let me just get all this cleaned up. All right, I think I got it. All right, so, oh man, what happened? I did something. Must have reverted back. All right, I'm going to erase the whole thing. All right, so 1B here, okay, looks like this, right? Pretty simple structure. And then the signal bar has to look something like that, right? Okay, so there is the 1B. Now, just so you know, okay, what I have found is that the larger the length of the 1B, the more powerful it is. Because it's representing, this would be bullish, right? But if it's down here, it means a lot of bulls came in, but the bears came in a bigger way than it would have in a smaller price bar, right? So that has more meaning, okay? So if you get a 1B with an elongated, I call it an elongated price bar, which just means the distance between the highs and the lows are further apart, then that has more meaning, okay? All right, now let's take a look at a 2B. All right, so prices move up. This price bar, however, is bullish. Okay, the close closed above the 50% mark, didn't it? Okay. Now, another example of a bullish price bar could be something like this. Oh, except I got to draw it straight, right? Okay. Don't forget, I'm doing this freehand. That's not that good either. But okay, so let's say we have. Let me just see what we could do here to make this kind of interesting. Yeah, let's do this. Let's put this here and this one here. Okay. Well, that would be a normal bullish price bar. If you put this here, let's put this here and straighten that bar out a little bit. All right, now this would be a bullish price bar. Okay, that would be bullish, right? Because it closed on the upper half of the bar. This is the open. Now again, if you're using candlesticks, it doesn't matter. You could have your candlestick there, but the art software, if you have the art reversals loaded, is going to be looking at this the same way, so it doesn't matter. All right, in this case, all right, we have a bullish price bar, okay, that is bullish, all right? So this cannot be a 1B, bearish, right? All right, so this is a 2B. Because this price bar cannot be the signal bar because it's technically a bullish price bar. So we have to wait, all right? So let's say the next price bar comes down here, and this time it's bearish. Okay, so this becomes the signal bar right here. And at this point, you'll probably get a little box or dot, depending on what platform you're using. And the 2B is marked here. So this first price bar, I'll label this 1, all right, is not the signal bar. It's the second price bar right here, okay? Now, why do we care, okay? Well, again, the system is looking at a variety of dynamics before deciding if this is even going to cut the mustard to be labeled, right? So the idea is there is a configuration in this move up that the system liked. The system did not like this being a bullish price bar, so it delays its response. However, on the next price bar, if it fits the requirements of a bearish price bar, you'll get the 2B. Now, the reason we like to identify the first price bar, okay, and just not call this a 1B special, all right, is because if you're going to go short when prices go below the signal bar on price bar 2, your stop is going to be always at the top of the price bar number 1. And if you think about that logically, that's where you want your stop, right at the top of the pivot. So we need both price bars to initiate a trade, one with an entry and one with a stop. So we need 2 price bars and we call it a 2B. All right, any questions? So B stands for bar, 2 bar and 1 bar. Okay, so that's how the art reversals work. And then of course, if this heads down and you get a 1B here, then you would exit the trade there, okay? Now, generally with pivot points, when this 2B is hit, it's good for at least 2 to 5 price bars, okay? Some people like get out at the second or third price bars if they're just scalping. All right, now one more dimension to throw in here, okay? Your exit, don't forget, is at the top of price bar number 1, right? So if you get in here, when prices go below the entry, I'll call this the entry, all right? Your exit's gonna be at the top of the 1B, not at the top of the second price bar. So if we get a reversal and it comes up here and then heads back down, you'd still be in the trade because the stop's at the top of the 1B, not the stop. The stop is not at the top of the 2B signal bar. So that's a big difference from the 1B. The 1B, your entry and your exit is based off the same price bar. On a 2B, it takes into account 2 price bars. The signal bar is the entry, labeled and marked by the 2B icon or text, and the first price bar, or the high, will be your exit. Big difference. Okay? So that's important. And likewise, if the 1B stop got hit, okay, then you would get an exit signal as soon as it got above the 1B. All right, any questions on that? Because I wanted to cover that because I've gotten a lot of questions on the email about that. And it's been a while since we talked about these. So this is the ART reversal. And the ART system has basically 3 studies with it. You know, you have the pyramids, right? So when we talk about ART, we're talking about pyramids, that's 1, right? Then you got 2, the 1Bs and the 2Bs, right? And then 3, the color bars, okay? And that's how we color the price bars based on what I explained here, determining on who's in control at the end of the price bar. So you got pyramids looking for trending patterns, higher highs, higher lows, and don't forget about the momentum that it's looking at when they form. And then you've got the 1Bs and 2Bs looking at the pivot points that you can use along with a trending market or scalp a channel or the many variations in between. And then you got the color bars, which are drawing the color red or green or neutral. You know, if the open equals the close and it's neutral, it's right at the 50% mark. So that would be a neutral bar. That would look something like this, okay? So that's what the ART system does. It's not looking at anything but those 3 specifics, which is kind of cool. And then, of course, we added the OWL for confirmation, PTF for additional targeting, all right? And then we got the trend line master for add-ons. And then you got the ERI for scaling out of manic markets. So that's kind of the purpose of all these indicators, all right? So that's what I wanted to cover today, and that kind of takes us to the end of the half an hour. I didn't see any questions come in, so I'm glad we got to cover that entire topic because I think it's an important one, especially if you have the ART software or wondering what it was all about. All right, so before we end, if anybody's got any last minute questions, then if there are no more questions, we'll call it a day. Don't forget, we post this in the secure area on our YouTube, and the only link to access that is in the VIP area under client support recordings. So they're all there for you. All right, so we'll have this up by later this afternoon. All right, well, that sounds good. Thank you, everybody. You're very welcome. Okay, good. I'm glad this helped. Okay, so we'll see you back here next week. Again, if you have any questions on anything, feel free to write them down and bring them. And if it's something more immediate, you know, you can fill out a support ticket as well. All right, so we'll see you back here next week. Have a great one.